What's up, guys? Welcome back to my channel. If you guys are new here, welcome in. My name is Jennifer and I trade gold in the foreign exchange market. So in today's video, we are going to be talking about the foreign exchange market. I'm pretty much just going to go over what Forex is, how it works, how I make money, and how you can too. So without further ado, let's begin. Okay, I'm going to share screen. Okay. So what is the foreign exchange market? So the foreign exchange market is simply the global marketplace where people exchange one currency for another. So imagine you're traveling from the US to Europe. You have to give your US dollars to receive euro, right? So euro is the currency in Europe. That exchange happens using Forex. So every single day when people are traveling, they are exchanging their currencies for another. When you go to a different country, you have to exchange your US dollars for the currency in the country that you're in. So in this example, if you go to Europe, you have to exchange your US dollars for a euro, right? In order for you to purchase anything in that country. Now, when it comes to Forex trading, you do not have to travel all over the world to exchange your currency to make money. That is not how the foreign exchange market works. There are platforms that allow us to trade from our phone or our computer. Now, in Forex, currencies are traded in pairs. So in Forex trading, you buy or sell based on whether one currency is expected to rise or fall against another. So here we have Euro USD. Now, there are two parts to a currency pair. There's a base and there's a quote. So the first three letters of that currency pair will always be considered the base. This is equivalent to 1. And the last three letters of a currency pair will always be your quote, and that's going to be equivalent to the current market value. So whatever the price is at the time, that is what the quote will be equivalent to. So here we have Euro USD equals $1.12. So what does this mean? So if I was to give you 1 euro in exchange, you would give me $1.12. Okay, that is pretty much how exchanging works. There's an exchange rate at play, and this exchange rate fluctuates all day, every day. And this is how we're able to make a profit. Of course, people trade larger amounts, not just dollars. Of course, it's more money than this, but this is just the simple basic numbers for you guys to understand it a lot easier. So, how do traders make money? So, in the foreign exchange market, you can make money when you place a buy trade and make money when you place a sell trade. You will make money when you buy a currency when you expect it to strengthen and selling it when you believe it'll weaken. Traders use specific strategies to confirm the direction of the market before entering a trade. If a trader buys the Euro USD pair at 1.12 and the price rises to 1.15, a profit is made. However, if prices move in the opposite direction, the trader will experience a loss. So here we have the same example. You buy Euro USD at 1.12. Later, it rises to 1.15. You'll close at this level and you'll take your money. And if it does go the other way, you will experience a loss. Okay. Now, when price goes from 1.12 to 1.15, this does not mean that you made 3 cents. Okay. So there's something called pips and lot sizes. So let's just go into that next. All right, so pips and lot sizes. So a pip is a small unit used to measure how much a currency price moves in Forex trading. For most currency pairs, 1 pip is the change in the fourth decimal place. So if price went from 1.2000 to 1.2001, that means that price increased by 1 pip. Okay, so yes, it'll be $1.20 when we're looking at the value of it or the exchange rate. But when we're trying to understand how much money we can make in this market, we're now looking at the pip movement or the pip fluctuation of price. Okay, a lot size is how big your trade is. Now, common sizes are micro lots. So this means that price is going to move by 10 cents per pip. Then we have many lot sizes. So that means that price will move in $1 per pip. And then we have standard lot sizes, which means that price will move by $10 per pip. The bigger the lot size, the more money you make or lose for each pip the price moves. So if you was to buy in Forex and price went up 1 pip and you used a standard lot size, you would make $10. If price went down 1 pip and you used a standard lot size and you sold, you would also make $10. Now, if you were to enter for a buy and price was doing the opposite of what you pressed, so if you press buy and price was actually going into a sell, you would lose $10. And it is the same for selling. So if you was to sell, but price was going into a buy, you would lose $10. So in short, pips measure price movement and the lot size determines how much that movement is worth. Okay. I'm going to make a more detailed video on pips and lot sizes. If you guys want to see that, definitely let me know down below and I'll, make one for you guys. So, who trades Forex? So, you have banks, you have governments, you have big companies, and then you have regular people like me and you. Now, the banks, the big companies, and the governments, they have a lot more money to move the fluctuation of price. We, as retail traders, we are just there to follow what we see on the charts to make a profit, right? We cannot control the fluctuation of price, we just following behind it. So whatever, again, we see on the charts is what we are following. We're not guessing, we're not assuming. We're using a strategy that is going to help us understand where the market is moving, and we're going to place our trades based on what we see. Okay. All right, so why is Forex popular? So Forex is open 24 hours a day, 5 days a week. The Forex market runs nonstop across different time zones worldwide, enabling trading from Sunday to Friday. So the market does open Sunday night at like 6 p.m. and then Friday the market will close at 5 p.m. Now, there are trillions of dollars traded daily in this market. The Forex market is the largest financial market in the world with trillions of dollars traded daily across currencies. Now, you can start with a small amount in Forex trading. It does allow you to start off with maybe like I think $10, $20 for certain brokers. I do recommend to not start off that small, but you can start off with a small amount of money and scale it as you gain the experience. So that's a pretty cool part of Forex trading. You don't need a large capital to begin. You can start off with a small amount. But again, even though you can start off with $10 and $20, I just highly wouldn't recommend that, okay? Last but not least, it's a lot of online platforms that you can have access to in order for you to trade in this market. So Forex trading is supported by lots of online platforms you can access at any time. Now, when it comes to trading in the Forex market, you do need a broker. They're pretty much like a bank where you put your money in order for you to trade, and then you take your money out when you make your profits. You do also need a trading platform. So I know some of you guys may be familiar with MetaTrader 4. MetaTrader 4 is a platform that you use to execute your trades. So when it comes to the broker and the trading platforms, those kind of go hand in hand. With my broker, I use Henko Trade. So Henko Trade does have the trading platform built into their website. The trading platform that they use is called ActTrader. All right, now let's just go over some warnings when it comes to Forex. I'm going to just hide me for a second, put me in the corner. Just some big warnings, okay? Super important. Forex is not easy money. Now, most beginners do lose money, and many traders do lose money because they don't have the knowledge or the experience that they need in order to succeed in this market. It's something that you need to study and practice. You should not want to rush this process. It's definitely going to be your own unique journey, and it's going to take you time to fully understand the market, to understand structure, to understand candlesticks and patterns, and when to get into the trade, when to get out of the trade. Like, there's so many things that you need to learn and understand in this market. It's just like anything else in life. Like, if you wanted to learn how to drive a car, it's going to take you some time. You got to take your lessons and practice and get on the road and, drive the vehicle and pass your test and get your license. Like, it's a skill that you have to learn and you have to master in order for you to be successful. Now, it's also a high risk because of the leverage. Now, leverage allows traders to use borrowed money, which can increase profits, but also greatly increase losses. Now, I have not tried this route when it comes to trading. I used my own capital. There are tons and tons of prop firms. They offer you, this package deal where you pay a fee and then you trade into this account with all this money, and then you have to pass this challenge. And if you pass the challenge, then now you have the money. The money's yours. That's what a prop firm is, and that's how you're able to make a lot more money quicker in Forex. But again, me personally, I just really don't like this route, especially for new traders. I really believe that you should practice the skill first and understand the skill first before you jump into that route. Okay. Last but not least, this is kind of tying everything together. You do need a lot of education, a lot of practice, and a lot of discipline in this market. Successful Forex trading requires learning, consistent practice, and self-control. So you do need to practice. You do need to have some sort of self-control. You need to work on your psychology. And once you understand the skill and you master the skill, it will become a lot easier for you to see easy, clean, nice setups and take those trades and make your profits, right? But again, it's going to take some time. So in conclusion, Forex trading is a global marketplace where currencies are exchanged, allowing traders to profit from changes in currency values. Many beginners lose money due to the lack of knowledge, poor risk management, and emotional decision making. To trade successfully, individuals must invest time in learning how the market works, develop and follow effective trading strategies, practice consistently, and maintain discipline and patience. With proper education and a responsible approach, traders can better manage risk and improve their chances for long-term success. All right, so that's pretty much what Forex is and how it works. I really hope that this video was super helpful. If you guys have any questions, please comment them down below. I really hope that you guys enjoyed this video. If you did, please give it a thumbs up. Do not forget to subscribe to my channel. I love you guys so, so, so much, and I'll see you guys in my next video. Bye, guys.